Good morning, traders. This is your captain speaking. And today I just wanted to make a quick video about how to kind of navigate around the ThinkorSwim platform. That is the platform that I use when I am going over the charts and kind of making those quick little YouTube shorts. Now, this is the desktop version. As you can see here, we're looking at oil. An interesting thing to note is even though it is Labor Day, the futures market is open until I believe it's 12:30 p.m. So just afternoon, as opposed to you see the actual stock market itself is not open, but the futures are moving. Do I suggest trading on these days? If you have the ability to trade futures, no. Oil did make a significant move, but there's just not a lot of not as much volume as a regular day. So unless you had bought here and just kind of held it, you normally don't want to be trading on these days because there's not enough volume to constitute like making contrarian trades. Maybe you just want to buy and hold would be a good thing. Matter of fact, that's what I kind of see usually either right before or right after um, holidays, is that the market tends to go in one direction and just kind of go that way the entirety of that holiday until the actual next trading day where the market is actually open, the stock market that is. But let's just say this is a normal day. You're looking at oil, and just because of OPEC with the reduced gas supply, shot the price up. So okay, cool, price is up here. And you're thinking, you know what, it's getting kind of close to that 90-60 level, 90-50. When it hits there, I want to buy some put options. Now, remember, put options are you want to bet against something. Yeah, I think it's going to start coming down here. So I want to get put options. Okay, stock market version. What is the same thing? Well, that would be USO. Now, USO hasn't updated the price because, again, it's not open. At this price of 90, USO is somewhere around 74 or 75, somewhere right here. So you'd be wanting to get, it'd be something, I don't know, like, be somewhere around here. So you're like, oh, okay, yeah, I want to get some puts, and I'll probably get down to like 73, coming down here. So how do you do that? Well, first, as you saw, you can, if you have anything in your watch list over here, you can just kind of click and drag and it'll pull it up. So click and drag to bring USO. You can click and hold to kind of make it highlight, and that zooms in that area. Now you're like, okay, yeah, definitely want to get those puts for 74 and a half to go down to 73, something like that. Where do you find the option chain or the options ladder? You go to all products, then you type in whatever it is. So it's USO, that box. Now it pulls it up. Now you see right here, there's just, this is for September 9th, but you also have the 16th, the 23rd. You can choose whatever day. So knowing how far out you want, you click on that, then it brings all the strike prices, and the calls, which means you think it's going to go up, are on the left side, and the puts, which means you think it's going to go down, are on the right side. Now here in this little section, you can determine how many strikes you're seeing at one time. So if you're only looking to get right next to the price, you can get, 6, 10, and it'll just show the ones really close by. If you're thinking there's going to be a significant move and you want to get some that are way further out, type in 75, 70. It really doesn't matter how many, just, I think there's a default for like 50 or something. And you just kind of look, and it extends it. Instead of only being to 74, now it goes all the way to 84. Now, here at this section, you're like, okay, well, let's say you want put options for this coming Friday, September 9th. You'd go over here, and you're like, again, the price should be like around 74. So instead of it being at 72, it'd be like right here. So then you're like, okay, I want to get these 74 put options for Friday. So then you go over here, and if you highlight, it'll say sell on this, on the bid. If you don't click on it, but you just move your mouse over it, it'll say sell. Or if you move over your ask, it'll say buy. So if you click on it, it pulls up this little menu from the bottom. Now it says order entry, single buy. It says it defaults to 10, but you can change that default to 1 or whatever number actually. For USO, September 9th, the strike price is 74, type is a put, and then the option price itself. So, let's say you're just trying to buy one of them, you decrease that to 1. Then whatever it is, usually, again, you want to get something between the bid and the ask. Again, the market's not open, so the spread's kind of high. Also, not even accurate price. It'd be somewhere around like 200 or something. But let's just go with this. And it says, all right, it's 350 and 365. Let's say 350, 360, 355, something like that. Then you put confirm and send, blah, 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 blah. This says, okay, how much it will cost. So the price of the option is just move the decimal place over 2 times, and that's how much you're paying because it's 100 shares. It says right there. So just move it over 2 times. That's how much it costs plus commission. It'll tell you, okay, that's how much buying power it will affect, which means, okay, if you had 350, cool, all that, but send, and then that is the order put. Now, same thing. If you think, okay, actually, none of this ever happened, oil did not go up over the weekend, and it's still down here at 86. So you want to buy calls. So same thing, you're looking at it like, okay, let me look at USO. Oh yeah, I want to buy the 72 calls because I think it's going to go up. Go to all products under the trade tab. Type in USO. It's already highlighted on September 9th, but even if it wasn't, it's just going to be defaulted to that, and you just click it, bring down the drop down menu. The calls are on the left side because you think it's going to go up, and then you just find the strike price. Now, as far as determining what strike price to pick, how far out of a date, that'll be a whole separate video because that goes into factoring in time decay and the Greeks is pretty much, as well as just understanding just the price movement of the options for out of the money, and in the money options, and how that all plays based on how much the market's moving and stuff like that. So this is just a introductory video about how to place the order itself. So again, you're thinking, okay, it's going to go up. I want to get the 72 calls. So here's 72. Go to the left side for the calls, 72 calls. And again, you click on the ask to bring up the buy menu. single, you want to buy just one, so you make it go down to one. USO, September 9th, 72 call, and it's between 174 and 184. So let's say 180, 179. Confirm and send. You'll be paying $179 for one September 9th, 72 call, and then send. And then once it executes, a little message will pop up describing, excuse me, just describing all of that. And then you'll get a little sound, little notification about it executing. But that's it, guys. And yeah, again, I'll be making a video sometime in the future describing how I choose the strike prices and the dates, which in a nutshell, it's basically I look at Forex Factory to determine what's going on at a particular day. Oh, hey, look, Jerome Powell speaking on the 8th, as well as a few of the other FOMC members. And the ISM numbers coming out on Tuesday. So this week seems like a pretty busy week for the S&P. And if we look at that, it's like, oh, it looks like it can go down a bit more, but overall it's going to go up. So I might want to buy, if I go and type in, which the SPY is the Spider ETF for Friday. You know, I can choose something. Some of these calls, I think it's going to go to SPY. You know, like 400, 405. If I choose those, they are what's considered way out of the money. So they're relatively cheap. They're only $60 a piece. But that's because it's, in the market's eyes, highly unlikely that it'll reach that point by Friday. Whereas it being above 393 by Friday, if you buy the calls, costs 450, because that's a very high likelihood at the current moment that it'll be true. So you don't want to go on this low end, because while you could make a tremendous amount of money if you are right, the odds that you are stacked against you, and essentially you're just trying to win the jackpot instead of making consistent gains. Whereas on this side, you probably will make a solid, you'll be correct, but as far as your returns go, it'll be down drastically percentage wise, just because it's essentially saying, yeah, by Friday it'll be above 370. Well, yeah, it is at 392 right now. Is that a guarantee that it'll be correct and you won't lose money? No, of course not. But according to the market, that's what the prices are saying. And it also costs $2,200 a piece. And so you could be pretty secure in that, but also it just makes no sense to risk that much for that little return. Whereas you could, buy these 450s. I mean, the 393 450. So you're not risking as much, but the return on investment of that would be a lot higher than down here. So there's a trade-off, and you just have to kind of see what fits best for you in terms of risk and reward, and just knowing the time as far as like when any particular things are going to happen, any major events that you want to be including in your option dates. But all right, guys, I am out.